This episode of Market Call is made possible by Robinhood. Try out Robinhood Legend, the all-new free desktop trading platform designed for sophisticated traders like you. While there is no cost to use the Legend platform, there are other fees associated with your brokerage account. See the Robinhood financial fee schedule for more information. What up, peeps? The 18th of February. It is a Tuesday. It's Dan, Nathan. It's Guy Adami. Dan's in his uni. I'm in my uni. We have different uniforms, opposing teams, but the same goal for you today to try to figure out what's going on. How are you, Dan?
I'm doing well, Guy. I love that read when we come in here during that, what do you call it, a teaser, a trailer, or whatever. You said for sophisticated traders. Some days I do not feel like a sophisticated trader. Yeah, you know what I mean?
The market has a way of making even the most sophisticated feel
Correct.
as a tyro. Good word, by the way, if you want to look it up, or a novice for those that are just more used to that word.
Yeah. What's the saying that our good friend Doug Cass always says? Often wrong, but never in doubt.
Often wrong, never in doubt, which is also true. That's many people, by the way.
Yeah.
I'm often wrong, always in doubt. So I'm sort of the same, but not.
Yeah.
Anyway,
here
we are.
Little housekeeping really quickly before we get
housekeeping.
We got two different trades on one name using options. One's bearish and one's defensive for long. So we're going to hit that in just a few minutes, which is pretty cool. Guy, I don't know if you noticed this, but when you start the trading week, usually it's Monday morning, we are sending out a newsletter. Our good friend CC Lagater, new member of the team, is writing that on Sunday nights. And if you want that, it's basically a look ahead with all the earnings, all the economic data, anything else that's going on, and some great commentary. CC has been a market participant as long as I have. He and I went to college together. He was an expert options trader for years. So check that out. Sign up at riskreversal.com. You can have it in your inbox there, Guy Adami. You get it probably a little bit.
I do, and it's a perfect way to get basically close out the week, look forward into the next week, and then you, myself, and Elizabeth Young Thomas then have our Risk Reversal podcast on Monday mornings. Today we did it. Obviously, yesterday was a holiday, and then we obviously will look at a lot of the things that CC wrote about, and we'll try to sort of break it down. So it's a good primer for what we talk about on those Monday morning podcasts.
Yeah, and the other thing is you get them every Monday, Tuesday, Wednesday, Thursday, and Friday. Cece's doing a great write-up with us, highlighting some of our content, but also giving you a market wrap on a daily basis. So go sign up, riskreversal.com. Guy, what do you want to hit right out of the gate here?
Well, let's look at the S&P because that's typically where we start. And, we're within, let's just call it what it is. I mean, we're effectively at an all-time high in the S&P 500, 6121. I think the high was 61.28. And if I'm not mistaken, you probably know better than myself. I think that was on January 23rd. So here we are. Again, every sell-off in the market has been sort of gobbled up. You have a VIX that's tame, sort of at 15.5. And a lot of people look at this and say, there's nothing not to like. Lower left, upper right, sell-offs have been short. They've been followed by a pretty steep rises. The market's gobbling everything up. We're up against prior highs. The moving average is still sloping in the right direction. You look at this and say, how can anybody possibly be bearish?
Yeah, it's a great looking chart, no doubt about it. And, on a day like today, maybe Amanda can throw up the fateful 8 here. The only stock that I see up in the group, Microsoft's basically unchanged. And I see NVIDIA, which is up a little more than 1%. But, Guy, that was up more than 3% earlier on the day. And so, again, if you are in this broadening out group of folks, you're getting an S&P that's up just a little bit with some of the biggest leaders down. And which brings me to some other names, Guy. Just before we get to the NASDAQ, let's pull up like a Deere. This is one that we previewed into earnings last week, and it had that move lower after results. They looked fine, but maybe not good enough for a stock that was trading, particularly well into the print. You see some crazy moves, like straight up parabolic. And the reversal, maybe Amanda can show us like a 1-week chart or something like that. The reversal from the lows, I think it was Thursday morning, is pretty amazing. You see that gap low, and then it basically closes on the high, and then the follow through today. So are some names like this, are investors just making different bets on some cyclicals and the like, rather than big secular shifts?
We talked about this last week, as you said, and I think we invoked the great Louise Yamada. And if Amanda would do a longer term chart, like a 5-year chart, you'll see what we're talking about. I mean, John Deere or Deere and Company, whatever it's called, basically been going sideways for the last 3.5 years, 4 years. And you can see exactly what I'm talking about. This was a stock that was, again, to use the phrase, lower left, upper right until early 2021. And then we've been going basically sideways to maybe slightly higher ever since. And one of the things that I thought was, again, to quote Louise, the longer the base, the higher in space.
Mhm.
And yeah, here we are now. Now, I will tell you that initial move lower obviously caught me by surprise, but here we are now. So what do? This is either the biggest head fake of all time. And by the way, we saw a very similar head fake in the Russell about a year ago when you had a similar formation and you had this false breakout to the upside. Or is this thing, ready to go? So to me, the trade, if you're looking to trade, it's pretty simple. I mean, your stop is basically, let's call it those prior highs-ish, even if you want to do something else, maybe the low that we saw last week. And then you're looking for the upside just to run in a new trading range. But, you're right to point it out. This is one that I think people are playing to break out.
Yeah, no doubt. Let's go back to the SPX for a second here, Guy. And when you look where we are right now, 6120, like you said, it's kind of a brief new high, if not a matched high from, a month or so ago. But go and look back at that early December high too, right? And you see that obviously that big downdraft on December 18th when the Fed had a more hawkish statement than people. It hasn't made a lot of progress, and so again, if you take out that kind of series of kind of lower highs and lower lows, which felt kind of healthy at the time, but then that really quick, race back, if you want to call it a bit of a V reversal, we're kind of stuck here. Maybe we're making a flag, maybe it's a kind of breakout situation here, but again, it seems stalled, if you will, if we're going back, let's say 2 months.
No, that's fair. We haven't done a lot of work. But the move to the downside might have flushed some people out. I mean, the bulls are going to look at this and say, we had that flush, didn't last long. Here we are basically at new all-time highs. We're going to close at some point above those highs and we're off to the races again. The bears will say, I think, we haven't been really doing, not a lot of ground has been gained since the middle of December. And here we are. And as we get towards the end of earnings cycle, what's the next catalyst? And I like, by the way, Amanda's going to get really mad at me, but you said match top, which reminds me of a scene in the great movie Days of Thunder when Robert Duvall puts what he called match tires on Tom Cruise's car to make him feel a little bit better about sort of taking Rowdy on the higher end of the track. Do you recall that at all or no?
I do. Rowdy Piper. Guy, let's
Rowdy Piper, that was a wrestler. It's Rowdy Gaines. Yeah.
Right.
Anyway,
all right, really quick one, a little trivia here, and maybe somebody, if they put it in the chat before you get it, we'll send them one of those.
Yeah, I like this trivia.
What's one other movie that Tom Cruise was in with Robert Duvall?
Tom Cruise and Robert Duvall were. It's a good question. Hold on. Well, you know what? I don't want to take up too much of our time.
Right, we're going to come back to it. So the first person who puts it in the chat, Amanda's going to send you a t-shirt. All right, it's fine. Let's go to the NDX, the NASDAQ 100. Guy, you and I had been talking about this. The S&P had, kind of made a couple new highs here or ish, and then here you are, the NASDAQ 100 making its first new high, even if it's just a little bit, a smidge of a high here. We just talked about how the Fateful Eight has.
Oh, I know what it was. Jack Reacher. When Robert Duvall was the guy, he was the gun guy.
Yes. I'm surprised you get that. I would feel like that. I know you love Tom Cruise. I would suspect that is one movie that you would not have seen of his.
No, but that's a good pull by me, Jack Reacher. Yeah, I was going through the role. You could see my mind sort of spinning.
I did, and you were not even focused on my NASDAQ. No,
I was going to focus. I'm laser focused.
Yeah. So look at this one. Is that a double top, Guy? Especially if we have the Fateful Eight kind of stalling here a little bit, because the only way the NASDAQ 100 can move higher is if those 10 stocks or so, the Faithful Eight and a couple more, are kind of, back on their horse, if you will. Those 10 stocks are basically 32% or so of the S&P 500. You can get a bit more help from some of those other sectors, but the NASDAQ 100 cannot go higher.
I agree with you 100%. It all comes down to, I think, and you would probably agree with this, what we hear from NVIDIA next week. What is that, on the 26th, if I'm not mistaken? So, this chart's going to look probably a lot like the NVIDIA chart. I think the NVIDIA chart's probably going to be more pronounced to the downside. With that said, here we are. And the same way analysts, I think it was a week or so ago, that, and analysts upgraded NVIDIA into earnings. I think the stock was trading about 132 or so at the time. So good on them for that call. Here we are in the 140s. We'll see what happens when they report. I think you know my view. I mean, maybe it continues to sort of do the grind, but this is the prove me quarter in terms of, for me, gross margin. So to answer your question in a long-winded way, if NVIDIA disappoints, this double top will be intact, Dan.
It wasn't that long-winded, guy. Let's look at the SOX, the SOXX, because it's having a day today. And, other than Broadcom, there's not too many names that are obviously have a huge weight, right? Taiwan Semi, it does clearly, but it's kind of down 1% on the day. There's some news that Broadcom might bid for a portion of Intel. I mean, the news over the last week, guy, is like this thing might get pulled apart in multiple different directions. We know that they don't have a CEO right now, but when you think of the performance here in the SOX, we've highlighted this again and again for such great leadership over the prior 2 years, right? Largely led by NVIDIA. Look at this chart right here. I mean, it is stuck in the mud. It might be filling in a gap right here, but what would it take for it to get going a lot higher? It would take that NVIDIA, which you just mentioned. You know what I mean? So, again, it might be a bit of a wait and see here, but we are still range bound.
Well, again, you need Qualcomm to get on its horse for a change. You need AMD to sort of first participate for a while. I mean, Texas Instruments has basically been sideways to slightly lower. I mean, Broadcom has held up their end of the bargain, but you're right. I mean, it takes NVIDIA, and here we are. Despite all the work we're doing, we're right back up to that moving average. And to your point, we're sort of filling in that downdraft gap. So I look at this and say, this might be problematic. And again, it comes in, a week or so ahead of what could be one of the more important earnings releases we're going to see. And real quick, Intel, by the way, that's the I in your, what is it? The thing?
Gen AI trade. That would be on the fast money. We have those little acronyms, guy.
I love that. We actually, again, I just want to be crystal frickin' clear. This is one that I was trying to figure out how to play from alongside for a long time. But if this is a static chart, if Amanda can pull up a longer term chart, you'll see this recent low we made was the same low we made in the fall. We're about to fill this gap in the downdraft, probably around 28 or so. And, this is one that they're not fixed by any stretch of the imagination, but this one could surprise people. I mean, this could be a $30 stock and nothing has changed. So you can draw that downtrend line if you want from the beginning of this year. We're probably through that. I still think it's got room to the upside here.
Yeah, if it fills in that gap and it gets to 28, guy, I mean, at that point, I can't imagine that there's too much more value in a breakup. Like large parts of that business were discounted. So again, it makes sense to have this sort of move off those lows. What did it go to, like 19.5 to where it's trading right now? It's interesting on the SOX, the SOXX, the ETF, that we're spending some time here. We're done with the SMH. It's just too heavily, weighted towards Taiwan Semi and NVIDIA. I mean, listen, on a 5-year basis, though, guys, that looks like a big flag. It looks like a big consolidation. But, if NVIDIA was 25% of the S&P 500's results last year, it just can't continue, that way, if you will. It's up 4% on the year, and a bunch of the Fateful Eight are down on the year. So, who knows on this one? I just feel like, to your point, if you see some sort of deceleration below where the street is for NVIDIA, if you see margin pressure, if you see some commentary about what we heard out of DeepSeek and maybe some of the demand from some of their bigger customers, I don't think Jensen Huang is going to actually make those sorts of comments, but there might be some indication in the results, especially that gross margin guidance, because that would kind of lead to some sort of pricing pressure that you would see either from lower demand, right, or some competitive sort of situations.
That's what I'm looking, amongst the many metrics to look at, the one that I'll sort of look at first will be the margin number, which has, been basically 76, 77% for the last few quarters, if not longer than that. So we'll see. You were on a show other than Fast Money. You're on many shows, but you were on one show exclusively for a long time. Do you remember the name of that show?
Yeah, it was Options Action for 10 years, guy. I was on that
Decade.
Show. 10 years.
By the way, Decade's a great album from Neil Young for you Neil Young fans out there. A lot of Neil Young on my Spotify playlist, but Amanda once again made a fantastic little slide. So let's look at this Options Action, and it comes in the form of Super Micro, a name that we don't spend a lot of time with, but a name that's obviously been off to the races for like the last few weeks, to be honest with you.
Yeah, let's go to for real quickly. Let's go to a 5-year chart because this is last spring we spent a lot of time talking about this. This went from the Russell 2000, the small cap index, to look at that. I mean,
That was the
I've
day
never
it was announced. That top was basically the announcement of the inclusion.
never seen anything like that in my career. Maybe I have. Maybe I have to go back to 1999. But this is a server maker that goes into the data centers. They had #2 market share behind Dell. And let's go to a 1-year chart right now. You see that gap from the summer when they reported earnings. Their gross margins were far worse than expected. I think the street was at about 17% guy. They came in at 11. And you and I at the time were noting that Dell, the market share leader, had 22% gross margin. Okay, so this is a hardware company. You don't expect to have the sort of margins that you would have a software company. But when you see them cut in half like that, no matter what's going on, you got to steer clear. So I don't know what's going on here. There was an investigation into their accounting practices or the like here. And supposedly they've had some commentary about some of the issues that they had. This is an internal investigation. I don't think it was external. Things were going to be fine. And they were being threatened to be delisted from the NASDAQ, guys. So straight line here again, doesn't look anything like it did last spring. But at this point, it just doesn't seem like there's a whole heck of a lot of reason why it's rallying.
No, none whatsoever. But that makes sometimes the most interesting trade. And I think it was last week on Fast Money, I think the stock was trading, I don't know, 46 or 47, and we were talking about it. And I said, look, you've seen stories like this before. This could surprise people. I'm like, I don't think their business is fixed, but this is the stock. And if Amanda wants to go a little longer term out, you'll see what I'm looking at. I said it could get to 70. And then maybe you take a shot. And if you look at what I'm looking at in terms of 70, you want to draw sort of horizontal line across. You can see what whatever that low was there, that's the level that I was talking. Go up a little bit, up, 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 up. Keep going up, up, up. Draw that horizontal line higher. That 70 level, that whatever. No. I don't know who's impaling themselves. But that right there, boom, whatever that low was across there, that's where I think it can trade up to. Thank you.
Well, look at her. She's a legend on this machine.
Yeah.
I'm gonna start
70. I said
I'm going to start driving on this thing in a little bit, but let's go back to that slide on the options action and what caught our eye about this. Obviously, the movement. This is a company that came out with some data or at least some guidance this morning that was better than expected. That's the only piece of news. I don't know how you can trust a company like this given some of the issues that they've had with their internal controls, but 2 times average daily volume, and the call volume was 3 times that of puts. The most active strike, the Feb 60 calls. Okay, so here we are, Feb 60 calls. That is a good bit away. One of the things when we highlight this sort of action, we're not making any judgments about it. We're just kind of reporting on it. And one of the things that I find interesting about this is that coming into today on that Feb 60 call line, there was only 11,000 in open interest. I think as the time when we put this up there, 87,000 options traded. Now, you can look and see how many of them are buying. I don't think folks were selling those, especially in a name like this with the short interest that it has. But you kind of see that there's folks playing for some upside in a big way between now and the end of the week, Guy. I think that's a difficult way to make money, especially chasing a stock that has gone this far, this fast. At least you're defining your risk up there. But again, it's not a way that I like to trade.
And we're not suggesting anybody does. But it's going to be fun to watch to see how this plays out. And shorts are going to get squeezed, and I do think we can get back to that 70 level. And then we're going to have a conversation about potentially how to structure a short position. The problem, of course, is going to be volatility is going to be very expensive. With that said, let's go to what I like to say, the call of the day. This is out of Wolf Research with an E. Upgrading snow, downgrading data, dog. We'll do one at a time. And, I'm sure we have a snowflake chart, so we're going to put this up. And this is one that I looked at, and, this is a shorter term chart. But if Amanda can do a longer term chart, if you can do a longer term chart, you'll see what I'm looking at. The highs in November 2021, the next high in February, and we're about to make that third point on a very steep downtrend line, if you want to draw that, and we're right up against it now. So, I see what they're looking at, Dan. I get it, but, this was the stock that was everybody's darling for a long time. Obviously, valuation caught up to it a few years ago. Now it's starting to sort of get back on its horse, but I think we're up against pretty significant resistance here.
Yeah, and from a fundamental standpoint, this is a company that it's a big data company, and they do kind of it's basically setting up companies with their data who want to use large language models or a whole host of other things, and they're telling a story about AI right now, but it was kind of left out of the whole play for a while. It trades at I think they're on a gap basis. They do not have earnings. Let me just kind of pull this up on my FactSet machine. Yeah, they still lose a lot of money, guy. Gap net income expected last year. Okay, this is going to be fiscal 2025, a loss of like almost $1.3 billion. So, again, this company has had a difficult time from a performance standpoint. It was one of the hottest IPOs, as you can see, back in 2021, but that was a little bit of a different cycle here. So it's trading at about 17.5 times sales this year. And obviously on an adjusted basis, a really ridiculous multiple there. So, this is one that you probably don't want to chase. I think you would call this, from a technical standpoint, a bearish to bullish reversal. So maybe you get back towards those prior highs. But, this is a company, again, this is somewhere in the middle of this AI trade. But if you think about database architecture, what they're kind of creating and structuring data and, all the like here, I don't know, not so interesting to me with the losses of that they have there.
No, nor is it interesting for me, to be honest with you. I mean, I think, look, you could probably squeeze a little more juice out of this one, but it's had a pretty significant move off the lows. I still think valuation is going to be a concern at a certain point. People playing a little stock market here, trying to, I think, find momentum in a lot of these laggards. And by the way, I mean, we just pointed out in Super Micro, it's worked. I mean, there've been other names where, playing that, basically that momentum off an oversold condition has worked. But I think you would admit, and I'm going to say, it doesn't change the fundamentals of the company in any way. It's just basically a trading situation. And I think if you want to try to get it up to those highs that we saw early in 2024, maybe 240 or so, as you would say, have at it. But, I think it's getting a little late in the dance here.
No doubt about it. So speaking of late in the dance, you were early in the dance, and you like to dance with the girl you brought. That's something that you say every so often.
Well, it's that old saying, dance with the girl you brought to the prom,
Yeah, I got you, dog.
Got to be a gentleman.
Let's look at the Walmart. This is a name that, you have been behind for a whole host of fundamental reasons. I know that you've often, commented on the valuation of this name as it's gone higher. There's a whole host of things that you've highlighted. The fact that, their investments in generative AI has really helped their e-commerce growth, right? So it's helped their margins a good bit. And then obviously the trade down in a difficult inflationary environment that this company has received over the last year and a half. Have I adequately to laid out your fundamentals?
You have. You've done an excellent job. And let's start up a Walmart chart, because why not? And if you didn't know this was Walmart, you'd say, well, this has got to be a biotech stock, or this has got to be some AI adjacent, or maybe it's one of those energy companies that are benefiting from the use of energy and AI. Any of those things would make sense other than Walmart. And you look at this and be like, there's no freaking way this can be Walmart, but here it is. So the question you ask yourself is, I guess, is it justified? Is the valuation reasonable in this environment? Or, are we getting ahead of ourselves? Now, of course, you could have said that at any point in this trajectory, I think since 2024, you could have said valuation is concerned. And obviously, it has not been. Here's potentially the problem, I think. There have been margin improvements on the back of AI. But if you were to see sort of a flattening out of margins, or if somehow the comps came in line or slightly disappointed, anything on the guidance front that the market construes as negative, the nature of this move suggests you could see a pretty big downdraft. And I'm not going to say that it's over, but I'd be reticent to continue to play it from the long side into earnings. I think you have to move your feet here before Thursday's release.
Yeah, no doubt. I mean, listen, we're going to lay out an outright bearish bet, defining your risk, using options here. And then we're also going to do one for those who are long the stock, who have enjoyed these gains. And to your point, Guy, at any point, you could have pulled the ripcord over the last year or so, and it would have been a bad move. And so, again, we are cognizant of that. And the last thing I'll just say is that, we talk about valuation, in a name like this, it's usually like trades cheap to its peers, trades cheap to the market, that sort of thing. This thing has gotten extremely expensive for a company that has very low margins. They've been one of the very few in the retail, or if you want to call it a consumer staple, that have been able to benefit from some of the trends that have, excuse me, that have actually been, headwinds to the consumer. So when I think of this, and I think, all right, I'd like to take the other side of it. I don't really want to short the stock here, but if I use options to kind of define my risk, I want to look at a put spread. I want to look out to March expiration, and I can build this one for you right here if Amanda will let me take over the legend. And so when I think about this, I kind of focus on some levels here. I think 90 is that level where it consolidated, guy, before it took that move higher. But I want to look at the March 190 put spread. When the stock was about 103, it cost about 180, selling one of the way downside 90 puts at 30 cents and buying to open one of the 100 puts for 210. So it cost me 180. That is my max risk. You can do that math on a 103 price stock. It's a little more than 1%, about 1.5% or so. And so I just like the risk reward, risking 180 to possibly make 820. And I just want to show you how you build this on the legend. If Amanda will let me take over, give me 1 second here, people. I just have to kind of pull this thing up. Oh, yeah, I'm going to share my screen, Bill. That's what I was going to do. We got Bill in here now, guy, which is kind of fun here. And so here we are here. I'm sharing my screen. Here's the options chain on the legend. Sometimes you guys have a hard time making this out here, but if you are a Robinhood subscriber or user, you can pull this thing up. Like we said, I think it's a great options trading tool. So I'm going to look at this. I'm going to go to March expiration, which is kind of really easy to do. You see this here, and I go to March expiration. The stock again is trading at 103.12 or so. I want to look at that 100 strike put. It costs about 221, and I want to look to sell the 90 put at about 33 cents or so. You see that it's about 185, but if you bid mid-market for that thing, you probably get it in and around 180, guy. So I just like the risk reward. If we want to go back to that payout diagram really quickly here, risking 180 to possibly make 120. If it goes back towards that support at 190, I have a little more than a month or so. And let's just pull up the 1-year chart and we'll see how we're getting to these levels. And then let's pull up the 5-year. So the breakout level from about a month ago, you see where that is, guy. And you see the uptrend that's been in place on the 1-year. If you want to go back to that for a second, that's what I see is pretty decent support. First stop 96, next stop, I don't know, 92 or so. What do you think here?
So risking $1.80 to make 820. So that's a little more than 4 to 1. So the risk reward makes sense. Obviously, you have an event to trade around in the form of earnings. We talked about that. We had mentioned a number of times how valuation is extended, and that doesn't mean anything until it does. And my point there is it gives Walmart less room for error, so they got to get everything right. So this makes a lot of sense. And we were talking prior to the show, and you sort of got in my head, and you're going to say, and if we go back to the slide that outlines it, you would have said, the guy's going to say you leg into this, and instead of selling the 90 put for 30 cents, you buy the 100 put for 210, you wait post earnings, hope for your right directionally, and that 90 put you sold for 30 cents, you might be able to sell it for twice that on a sell-off. So that's another way to do it. But if you just want to structure it ahead of earnings, like set it and forget it, I think a 4 to 1 risk reward against a backdrop that's sort of favorable to have a winner here, and nothing's effectively changed. I mean, there's nothing wrong with Walmart other than they really have to do everything right this quarter for this trajectory to continue. So I like the trade.
Yeah, and so for me, the way I think of it, legging into it, I'd probably try to sell a downside put right before the close on Wednesday afternoon. They report Thursday before the close, and again, the probability. And I can go to let me run this thing again for 1 quick second here. I use the delta to kind of figure out what the likely probability of a strike to be in the money. So if we want to go to this 100 strike, and I go over here and I look at the delta, it's basically a 35% probability that's going to be in the money on March expiration close. If I look at this 90 strike put, the delta is like 7. Not a good sale. Like in general, as an options trader, you don't want to sell options that have less than a 10 delta while you have a high probability of success. The idea of being short that option is just not a great risk reward. So let's just say I get to Wednesday afternoon. Let's say the stock is at 100. I might look to sell the 95, right? I've taken in a bit of that premium, or looking to protect a bit of that premium in the 100 strike, because that delta would have moved higher. If we have a 100 strike put and it's trading at the strike, you're going to have nearly a 50 delta because it's basically a coin flip, right, in a month or so on expiration, whether it's below or above that 100 strike. So again, I look at the delta to kind of give me a sense. Yes, Guy Adami in the front row.
I have a question.
Sure.
What, Dan, if I were long the stock and I wanted to protect my long position into earnings on Thursday, is there a trade structure for that?
Yeah. So let's. I see what you did there. You took a look at the rundown and you.
No.
You just
Can I
asked.
tell you something? So this is something for everybody watching out there. A lot of people don't think I pay attention. They think I'm just flighty as hell. And I am flighty as hell. There's no doubt about it. But I also pay attention. Why, Dan?
Because it's the cheapest thing you can do.
Because it's the cheapest thing you can do.
All right, let's
so
talk.
Yes.
All right, so let's go back to the 1 year really quickly. Okay, and then let's go back to the 5. We're going to toggle for a second here. So again, that 1 year, you see that kind of 90, that's the low that it consolidated a little bit. It held that uptrend, right? And if you look to the upside, there's really no upside resistance whatsoever, right? So if you've enjoyed these gains and you start to think that it's getting long in the tooth, if you start to worry about the potential for some metric or some commentary that's going to cause this stock to correct, but you don't want to sell your stock, you might consider a collar trade. A collar trade against long stock is selling an out-of-the-money call and buying an out-of-the-money put. I'm creating a structure that allows for the stock that I own to actually appreciate up until that short call strike. If I get to that level at the expiration or above it, my stock would get called away, but at least I would have had that appreciation of the upside. And then by using the premium of the call sale, you're buying a downside put. Now, some instances you end up paying for that, and there's a net debit to that. In other instances that I like to do zero cost collar. So I have losses down to that long put strike, but then I'm protected below. Let's go back to that 5-year chart for a second. Maybe if the 1 year is not enticing enough for you, if you're long to basically put on a collar into an event, just look at that one. We already talked about it. I guarantee you Walmart did not cure cancer. That's not why the stock has had this move. So now let's go to the trade with a stock around 103. Again, you would put a collar on into an event if you are more concerned with extreme downside risk than upside potential here, right? So when the stock was trading around 103 versus 100 shares of stock long, I would look at the February expiration this Friday, 107 strike call, sell that for about 105, use that 105 in premium to buy a downside put. So I'm looking at the 99. So with the stock at 103, I have $4 of potential upside and I have $4 potential downside. So again, I'm protected below 99 and I'm basically capping out my gains at 107. So what I like about this is that the implied move in the options market is about $5. Okay. So I'm kind of getting a little bit inside of that either way. And, I just like this trade structure, especially if you don't want to sell your stock. The likelihood of this stock being up more than 5% is not great. Let's go back to the legend for a second. Let me share that trade. And I'm going to go to February expiration here. I'm just going to show you what the probabilities of that 107 strike call are. So I'm looking at it right here, 103.12. The delta on this 107 call is about 30% or so. Okay. And if I look down to the 99 put, the delta on that is about 25%. So again, you're talking about outlier sort of situations into the print, but I just like this trade structure, especially for a stock that has had the move that this has had, and it's at the valuation it has, and it has an event coming up.
Yeah, and it doesn't cost you anything to put on, to your point. It's zero cost. It allows you to sort of get a good day's rest on earnings day, and you have a little bit. The next day expires on Friday, if I'm not mistaken. And this is just an interesting way to protect yourself. And God forbid it was a disastrous number, you have that protection on the downside. And if it's a great number, well, you get called away and then you live to fight another day. It's not the end of the world. I think this is an interesting trade for those of you that are long stock for sure.
Yeah. And by the way, if let's just say the stock is 108 on Friday into expiration, you could always buy back that short call. So let's just say Friday, okay, on expiration day at 3:30, the stock's at 108. Well, just do the math. If it was a 107 strike call, right, the 108 call is going to be trading basically at $1, right? And it's going to expire in 30 minutes. So, again, you have some optionality just to kind of overuse.
I use that term all the time, optionality.
All right, what else do you want to do, Guy?
Well, no, listen, I think we've enjoyed ourselves.
Yeah.
We're trying to keep the shows, reasonable,
Yeah.
30 minutes, sometimes longer.
Yep.
We have a full slate this week. Liz and I did a podcast earlier today, which will have already dropped in your favorite podcast store.
Yeah.
Tomorrow will be Wednesday. We'll be doing Market Call. We'll also have another risk reversal podcast that will drop. Just a long list of content coming out. And oh, by the way, Danny Moses has started a podcast called the On the Tape podcast that dropped last week. So that's out there too. Just a lot happening, Dan.
Yeah. So this week on the Risk Reversal podcast, we have David Zervos that's going to drop Friday morning. He is from Jefferies. He's a very, very good strategist. He's never been on. Yes, he's never been on the podcast, Guy. And then I have a friend of mine named Imran Khan. He's the former COO of Snapchat. He runs a long short hedge fund, Pro-Am Asset Management, and he has been really hot over the last few years. And we're going to talk about some of the investments he has, some of his outlook on tech, maybe get a sense for what an ex-Snap guy thinks about TikTok, and just kind of all of the things going on with some of these big tech CEOs. So that's going to drop on Thursday. Lastly, Guy, this medium, the Market Call, is meant to be very visual. It's meant to be very trade oriented. And this is going to be the only place you can find Market Call starting March 1st.
YouTube.
It's going to be on the YouTube. And we think this is where it belongs. We think this is where it's going to grow audience. We think that the audio podcast store, whether it's your favorite or not, is just not a great growth engine for this medium. So we're excited to announce that if you are listening to this, or if you are watching this and you have not subscribed to YouTube, do that now to our channel, because this is going to go out of the podcast stores starting on March 2nd.
Makes sense. A visual medium requires a visual delivery system. That would be YouTube. So join the 101, actually 102 other 1,000 people that have subscribed. It doesn't cost you anything. So we're just cleaning. I mean, really just, when you're a kid and you color, you have your coloring books and your Crayolas.
You're Harold.
Huh?
If you're Harold,
I'm not sure who Harold
is.
is.
Oh, no, Amanda could pull that up. Harold in the purple crayon. You guys don't remember.
Okay. But, you draw, but you're outside the lines. It's god awful. And your parents tell you it's good, but it's shit because they're lying to you. So then you get better. You start drawing. Now we're drawing inside the line. Not only are we drawing inside the lines, but now we're drawing beautiful things as well. It's an evolution.
Yeah, we're streamlining it. That's what we're calling it here internally. So again, the Risk Reversal pod, it drops every day in your favorite podcast store. It's going to stay in there. We also put the video most days on the YouTube. Market Call Monday through Thursday. We got a bunch of great guests, and we got a lot of trading to do, and we got a lot of charting, a lot of visuals. So follow that on YouTube. Guy, I think that's it. A lot of housekeeping today, but hopefully you guys enjoyed those trade ideas, and hopefully we're kind of doing it in a way where you can figure some of this stuff out on your own, but we also take questions, Guy.
And we're doing it on The Legend, which is a great platform. And we mentioned Tom Cruise and Robert Duvall, so that just makes a great show right off the bat. Bill's there with a big smile on his face. Apparently, Bill got elbowed in the face during a basketball contest over the weekend. So Bill's playing hurt. Sorry to hear that, Bill. Yeah. Jacob's in the studio there cleaning some stuff up, which is beautiful. And always Timmy and Amanda just getting shit done. And of course, as you mentioned, Cece. I mean, come on.
Cece Lagater, get to know him, people. All right, Guy, we covered a lot of ground, a lot of fun here, a lot of housekeeping. We'll see y'all tomorrow, 1 p.m. Eastern.